morning. Can you can you hear me? Can you hear me? Hello. Good morning. Can you hear me? All right. How are you doing? How are you doing? Oh, all right. So we are in a new month. How did your last month? How was your last month trading week? I said last month trading. How did your last month go? I hope you learned from your mistakes last month. So one thing about trading is if it becomes a mistake if you are not learning from. If you don't learn from if you are not learning from your errors, that's when it becomes a mistake. Okay. If you don't learn from your errors, that's when it becomes a mistake. So you need to learn from your errors. Okay. So I was just reflecting on my performance last month, and I noticed I could have even made more, not about the number of trades that I took. I could have learned a lot. I could have even made more. Because I could have even made more if I paid attention to my risk management. I would have made more if I paid attention to my risk management. You get it? So one thing I notice about this month is prioritize or cherish risk management. I have to keep my risks the same in all the trades that I'm going to be taking, because one thing I notice is if you reduce your risks on some trades and some trades too, you increase your risks, you are not going to be getting a steep equity curve. You get it? You are not going to be getting a steep equity curve. So let's see something like this. I don't know whether you people see my screen. So this is what I noticed. If you if you want to, let's say, if you are just trading your personal account and you are just doing things randomly, that's fine. But if you want to keep an equity curve, you want to measure your performance. People are facing challenges in trading because they don't have a trading journal. If you want to be good in this, you need to journal your trades. You need to know what is working for you and what is not working for you. So you need to keep records of your trades, journal your trades, so that you know what is working for you and what is. So a lot of people are going to stay in this industry for like a decade and they are not going to be seeing results because they are not keeping track of their performance. They just come into the market today, do things randomly, go and sleep, come again today. They are not taking it as something that is going to elevate or something that is going to replace their 9 to 5. So they are not taking it seriously. If you want to take it seriously, then you need to keep track of your performance. Know what is working for you and not what is not working for you, because trading is all about pattern recognition. Trading is what? Trading is centered on what? Pattern recognition. So you need to strive hard to know the pattern that repeats itself day in and day out, day in and day out. You get it? You need to strive hard to know the pattern that is working for you. You get it? So if you are not striving hard to know the pattern that is working for you, then you are getting things wrong. Okay. So trading is more about pattern recognition. You don't your risk management. You don't. So I always say, like, I always say, Prof M just made me a better trader. You get it? Because That's where I started keeping track of my trades. I started paying attention to risk management, because when I was trading my personal account, I was not paying attention to risk management. I was just doing things randomly. But prop is going to force you to what? Keep track of your risk management, because you can't be risking anything and expect sustainability when you are trading prop. You get it? So sometimes this is how some people's equity curve look like. They will make some profits and they will lose it all. Okay, and sometimes it looks like they are breaking their what? The graph. It looks, you get it, and they will come again and they will lose it all. You get it? This out there. And some people don't even know, there are people don't even know equity curve. Some people just come into the market and just do anything randomly. This is how some people's equity curve looks like. If your equity curve looks like this, then there was a big, you're having a big problem. You need to address. Okay. Equity curve, if your equity curve looks like this, then you're having a big problem, because you have problem with what? Risk management. You are not keeping track of what you are risking. You just risk randomly. Okay. And this is how professional traders equity curve look like. This is how those who keep in check of their, this is how their equity curve looks like. They also lose, but their equity curve don't looks like this. The equity curve looks like this. They make profits, they will lose more, they will make profits. Okay, when they are winning, they win big, but when they are losing, small traders equity curve look like. This is how beginners, amateur, this is how their equity curve looks like. And this is how professional traders, this is how profitable traders equity curve looks like. You get it? You see the difference? It's very steep. Okay, this is very steep. That doesn't mean this maybe within the year, within quarter, within the month. That doesn't mean they don't lose. You get it? They lose, but it is steep. You get it? It is steep. And this is how like unprofitable traders equity curve looks like. You get it? So if you are not keeping track of your journey, you are going to be in the game for a very long time. This is not a game. So this is what changed everything for me. The moment I realized that there was this podcast that changed everything for me, that I was just listening to this podcast, and what this professional trader was saying, when it comes to trading is all about pattern recognition. So someone can be trading the news and the person is profitable because he has sat down and noticed that this particular thing plays out in the market for a very long time. You get it? The person has sat down and noticed that this particular thing normally plays out in the market for a very long time, and the person is taking advantage of it. You get it? So the person can be trading news and he will be still making a tons of money in the market. Okay, other person too will just be trading the 1 minute time frame or 5 minute time frame, and the person will be making a tons of money from it. Okay, so when it comes to trading, it's all about finding out what works in the market more often, studying the history, studying price action, studying history of price, and getting to know this particular thing happens in the market more often. And it's going to come with what? A lot of work. So if you are starting out with trading, your mindset shouldn't be making money. Your mindset at the beginning should be getting to understand what works for you. So for the whole of last year, this is what I strive to find out what pattern exactly works in the market. So if within so we are starting a new month, and based on my records, based on my history, based on my data that I've gathered, I've noticed that my frequency of trades is very less. You get it? I've noticed that my frequency of trades is very less. So as we started a new month, for instance, I'm not aiming to be taking like 10 trades. I'm not aiming to be taking like 7 trades, 20 trades. Because based on my performance, based on my history last month, or based on my past histories, okay, from last year, the data that I've gathered, I've noticed that my setup doesn't happen more often. So I'm aiming forward. So as I was doing my estimated returns for last this month, maybe the amount I'm expecting to be getting, or the number of trades I'm expecting to be getting, and with my returns possibly I'll be getting, I'm aiming for like maybe 4 trades for this month. High quality trades, 4 quality trades this month. Last month I took only, let's say I got 2 quality trades last month. So as I did my risk calculation and everything, I noticed that with that 2 trades, if I was even risking like 2% per trade, I would have easily gotten like 8%. I would have easily made 8% last month, because aiming for 1 to 2 risk reward, I would have easily made 8%. But I didn't pay attention to the risk management. My risk wasn't systematic. It was random. Some trades I will risk like 0.5, some trades too I risk like 1%. So the risk wasn't systematic. Okay, it was random. So that's why I couldn't make such returns. I could have easily made like 8% or maybe 6% last month with taking less trades. Okay, so trading is all about percentage game. It is not about how every day hitting it. So this month, for instance, we are starting freshman. I'm aiming to take like 4 quality. The highest should be 4 quality trades. That's what I'm aiming for, and I'm aiming for at least I should make like 6%. Okay, if possible, it depends on the market condition and everything. If I get a good trade that is having a good risk to reward, I can be making like maybe I can be getting like 1 to 3. It depends on the setup that is going. But my minimum trade that I'll be going for is 1 to 2 risk reward. 1 to 2 risk reward. That's what I'm aiming for this month. You get, so you need to plan your trade. I'm very sure a lot of people have started this month and there was no plan for whatever. They've forgotten trading is a business and they have to plan. Okay, they have to plan. They are not planning for anything. What they know is come to the market to make money. That is not how trading works. You are just going to be lost in the sauce. So you need to plan everything, have a trading plan when it comes to the strategy, when it comes to the system you're about to trade. So I've splitted out all the system, what I'm going to be looking for. Okay, what I'm going to be looking for when it comes to execution. What are the trade setups that am I going to execute? You get it? So I have everything, every laid down plan when it comes to the system. Okay, with my strategy, when it comes to the setup, what are the things that I'm going to be looking for? Okay, based on last month performance. I know market condition are not going to be the same. Sometimes a month is going to be a lot of ranging market. Some month too is going to be a lot of trending market. Okay, so I have plan for all of them. Okay, if I don't see the same pattern that has been giving me results, that has been giving me I've been winning on, I'm not going to be executing. Okay, one thing you need to understand, no one is pulling a gun on you. Execute something that you are familiar with. Execute something that you are like, you've seen it happening. I always preach this thing and I will continue preaching this thing till people get to understand. Okay, so I'm going to be executing the same trade setups that I had last month, the same pattern I had last month, the same thing that I'm going to be repeating. And when it comes to my entry, is the same thing. Okay, the same thing that I saw last month is what I'm going to be executing this month. And when it comes to how I take profits, how I close my trade, is the same thing that I'm going to be. The only thing that is going to be changing is at this point my risk management. When it comes to my money management, the amount I'm going to risk per trade, that is the only thing that is going to be changing this month. Okay, so kindly work hard to find out what works. It's going to come with a lot of work, okay, lot of losses, learning from your losses, and what you get to find what works for you. So if your equity curve looks like this, then there's something wrong with management is not on point. You get it? Your money management is not on point. So you need to work on that. You need to work on that. Okay. You need to work on that. So since I was okay. All right, so that's the piece of information I have for you people. Kindly make sure you are keeping track. It's going to take some time, okay, especially if you are starting out. It's going to be a lot of work. Don't expect to come in and just get it at once. It doesn't work that way. It's going to take you a lot of work to find out what works for you. So kindly give a like. As usual, give a like, click on the thumbs up button, give a like. Let's get it to 10. You are more than 10, and you have not subscribed to the channel too, kindly do so by subscribing to the channel too as well. Kindly give a like to the video, give a like to the stream. If you have not liked the stream, kindly give a like to the stream. Let's get it to 10. Let's get it to 10. Okay, we are more than that. Click on the thumbs up button. Let's get it to 10 before we proceed. Let's get it to 10. Click on the thumbs up button. Let's get it to 10, then we proceed. I have a lot of information for you. We are more than 6. Only 6 people have given a like. Click on the thumbs up button. The thumb. Okay, this is your thumb. So you see the thumbs up. A hand that has raised is a hand that has raised the thumb. Click on the thumbs up button. So unless it gets to 10 before we proceed, it's 7 now. Let's get it to 10. Click on the thumbs up button. Let's get it to 10, then we proceed. Let's get it to 10, man. Guys, let's get it to 10. We are more than 7 over here. So until then, if not 10, then you are still stuck. Okay, last one. Why you people feel lazy to click on the thumbs up button? So 9 more, what do you call it? 1 more. Click on the thumbs up button. Click on the thumbs up button. All right. Okay, so let's move to the fundamentals and see what's happening. So when Trump is on power, you need to expect. So you see the market opens with with a lot of gap. So if Trump is on power, you need to be expecting all these things, because he's going to say something that is going to trigger other countries to also come out. So just recently, when Trump delivered or gave out his speech, he talked about some tariffs, and he talks about Canada too as well, about the oil or something. So Canada too, they've also come out to counter what Trump said. So there are a lot of news, high impact news during the weekend. So that's why we are seeing something of that sort. Okay, so Trump said, mentioned that if you are if you have been bringing goods in their country, either you are going to produce the goods in their country to get tax incentives, or you are going to be getting some incentives if you produce the goods in their country. But if you are not going to be producing the goods in their country, and you are trying to produce it in your country and bring it in their country, then you have to be paying you are going to be paying some taxes on the goods that you are going to be. They are going to give you some taxes on the goods that you are going to be bringing in their country. Okay, so it has triggered a lot of controversies among the world leaders and among some of the world leaders. So that's why we are seeing a lot of this hike and other stuffs in the markets as well. But I think because of what the Canadian people, or the Canada leaders, or what, because of what they said on the weekend, so there was a lot of high impact news during the weekend. That's why we are seeing these gaps in the market. So what you need to understand, based on our knowledge, we know that these gaps are going to be filled. But as to how to position yourself to take advantage of this gap, that's the problem now. To take advantage of these gaps in the market, that's the problem. So let's check out the fundamentals and get to know if there's going to be any high impact news for today. So today is February 10th. So checking out the lending session, 8:15, we don't have any high impact news. They are all yellow folders. You don't have any high impact news. So the only high impact news is going to be happening around 3 p.m. during the New York Stock Exchange session. That's when you are going to be having these news. So PMI. So mostly it's about a survey that they ask the purchasing managers how they are feeling about the economy. They are thought about the economy. So unemployment, on sales, everything. Okay, everything that brings about what economic growth. They are going to share their views. They are going to give their views on what they think about the economy. Okay, so mostly it's in threshold. So if it is about if their views is about above 50%, that means there's what expansion in the economy. And if it is below 50%, that means what there was contraction. So expansion means what the country is doing well. The country is performing very well. Okay, and if it is below 50%, that is contraction. That means what there was something wrong with the economy. The economy is performing very, very badly. You get it? So mostly it is in threshold. So currently, this is what they are expecting. According to forecast, they are expecting 49.3, and the previous numbers too was what 49.3. So it's the same thing as what analysts, based on data they've gathered, what they are expecting is what 49.3, and based on the previous performance and based on what the previous data that was released, that was last 2 months, they got 49.32 as well. So they are all less than what 50%. Okay, they are all below 50%. So I'm expecting contraction in the economy. Okay, so if there was contraction in the economy, that means what the currency too is also going to be weak as well. So if the currency too is weak, what you are going to be expecting is what we are going to be seeing depreciating in what the currency as well. So the currency at hand is what the dollar. Okay, the currency at hand is the dollar. So if you are pairing it with any currency, what you are expecting, but so currently 49.3, they kept the numbers the same, 49.3, as they are seeing the numbers to be the same. I don't know if because it is below the 50%, we are still going to be seeing the currency depreciating as well. So with fundamentals, so since mostly I've not gathered a lot of data on how mostly it works. Okay, I'm not saying it's bad to trade the fundamentals, the high impact things, but for me, the data I've gathered about the market is not centered on what the fundamentals. It is not centered on what mostly the high impact normally do. So we have a lot of people. We have some traders who have gathered data on mostly when the high impact news is about to be released, things that they expect to make decisions on. It's working for them. That's fine. But my data is not centered on what. This one, my data is centered on a technical analysis, and based on some patterns that I've recognized in the market that mostly repeat itself. That's what my data is centered on. My data is not centered on the fundamentals. So I have little knowledge about when the news are released or when the news is about to release, mostly how the market react to. That's not where my data is centered on. So as I've been saying, trading, when it comes to trading, either any, if you are trading the financial market, it can be the forex market or the currency market, it can be the digital market, digital currency market, or the crypto market, it can be stocks, it can be bonds. If you are trading, it's all about data recognition, or it's about pattern recognition or data recognition. Okay, what have you seen it happening in the market more often? You need to make sure you are paying attention to what everything that is happening in the market, and refine those data or refine those happenings and make it your own. That's all about trading. You need to what refine those happenings, the movement of price, the news event, and those things, and find out what normally plays out more often in the market consistently, what normally plays out more often in the market. So if it is about, you are going to focus on the fundamentals. Okay, if you are going to focus on the fundamentals, the high impact news, to find out what normally happens in the market, to find out what works, okay, what repeats itself, let me put it this way, what repeat itself more often, then that's fine. You are going to be profitable doing that one. Okay, and if you are going to also dedicate time to find out with what the technical analysis, what normally works in the market more often, you are going to get some data around that side. That's fine. So it's like being in a business. Okay, in business we have some, okay, let's say industry. Okay, so let's say the forex industry, for instance. The forex industry is very broad. We're having a lot of niches in the forex industry. Okay, so you can just focus on the prof side, you can just focus on personal account growth. So there are a lot of what niches in the forex. Maybe if you want to take forex as your business, there are a lot of business surrounding the forex industry, not only in trading. You can make a lot of money doing other stuffs as you are in the forex. So it's the same thing in trading. So when it comes to trading profitability, there are a lot of things that you can make or you can do to be profitable in the forex industry too as well. So are you going to, when it comes to trading, are you going to be focusing on the fundamental side? Are you going to gather your information on the fundamental side? Okay, are you going to gather your information on the fundamental side when the news is about to be released? What are the things that normally happens? And when it comes to the news too, for instance, what news are you going to be focusing more on? Are you going to be focusing solely on the retail sales news release? Are you going to be focusing on what CPI data news release? Are you going to be focusing on maybe? Are you going to be focusing basically on what do you call it? Interest rates release? You get it? So there are a lot of things you can do to be profitable. Okay, so it's very broad. If you want to be profitable, it's very broad. Okay, so which one are you going to be focused on? And when it comes to the technical aspect too as well, when it comes to the technical aspect, which currency pair are you going to be focusing on? Okay, and one thing you need to understand, currency pair that might be working for you. I've been seeing a lot of my students trading gold, but maybe I'm not trading gold. That doesn't mean it's not working for them. You can be trading gold and it's going to work. So focus on what exactly works, is going to work for you on the currency pair, on the instruments you are going to be trading. Which instruments are you going to be focusing on? Okay, so know which instrument exactly are you going to be focusing on to be making money from the market. Are you going to be focusing on gold? Are you going to be focusing on maybe the currencies? Are you going to be focusing on indices? That's the instruments you want to trade. Indices. Are you going to be focusing trading what? The Bitcoin. Okay, so the indices, that's the stock market. Okay, are you going to be focusing on the stock? You get it? So know exactly based on the data you've gathered, not just waking up and things are going to be working for you. That's not how it works in the market. You don't just wake up and expect things to work for you. That's not how it works. You need to gather data. Okay, and when it comes to the time frame too as well, with the time frame, you're having a lot of people that focus on the lower time frame, like the H1 time frame, M30 time frame, M15 time frame. You get it? So which of them are you going to are you going to be focusing on? Which of them, based on your data that you've gathered, based on the information that you've gathered, which of them works for you best? Okay, so if I'm using H4 solely, that doesn't mean H4 is also going to work for you. Maybe you are impatient, you can't wait for some days to get a trade. Okay, so such person like you need to move to the maybe H1 time frame. Make your focus make H1 time frame as your focus time frame, move to the lower time frame like the 15 minutes, the 30 minutes as your what, your entry time frame, then you execute on that. But based on, because for me, for instance, I sat down and I noticed that when I take trades more often, it normally affects my psychology, my emotions. So I need a time frame that is not going to give me trade more often. Okay, so maybe once a week I'm okay, because based on research, if you take trades more often within a day, if you take a lot of trades, it's mostly based on research, based on research, okay, or based on statistics, or based on data. If you take trades more often, it normally affects your emotions. So for me, it's not about even the research that was gathered. I want quality. Okay, so I focus mostly on the higher time frame, like the H4 time frame or the daily time frame. That's where I mostly focus on. So know which of the time frames you are going to be focusing on. It's very, very important. Know which of the time frames. So you don't just wake up and expect things to fall on your laps when it comes to trading. There are a lot of works that goes in. Okay, there are a lot of works that goes in. So those who are profitable, those who are making a lot of money in the forex market, it has taken them a long time. Okay, it has really taken them a long time to figure out what works for you. So as I've been saying, when you're focusing on technical analysis, it's all about pattern recognition. It's all about finding data that repeats itself in the market more often and taking advantage of it. That's all. The moment I get to know this thing, things started becoming easy for me when it comes to trading. Okay, things started becoming, because I've just sat down, based on, I've gone through my history, I've gone through my past trades, and I've noticed a pattern that normally repeats itself in the market every day, and I'm just doing the same thing every day. Nothing changes. I'm just repeating the same process every day. Okay, I'm just repeating the same process every day. So if you find what works for you and what increase your bet size, that's the most important thing. Okay, that's the most important thing. So if this information has been a help to you, kindly type in 1 in the chat box. If this information, if you have been here at the beginning of when I started my presentation, and the information you've heard has helped you, kindly type 1 in the chat box. If you get me well, kindly type 1 in the chat box. If the information I just gave has helped you, is going to help you, kindly type 1 in the chat box. Let's proceed. If it's not making, if it is not clear, to kindly type 2 in the chat box. If it is clear, kindly type 1 in the chat box. Let's proceed. If the information I just gave has helped you, kindly type 1 in the chat box. If you are not getting it, to kindly type 2 in the chat box. Kindly type 1 in the chat box. Let's proceed. So did you guys hear me? All right, so if you are not going to talk, let's proceed. Okay, so let's move on. So when it comes to let's move on with the chart analysis. So I'm seeing a huge gap in the market. So the gap is going to fill. So at what point is this gap going to be filled? So let's move on to the technical analysis and see what's happening in the market. So with the technical analysis, moving on to the monthly time frame, doing our top down analysis, what am I exactly going to be expecting in the market? Okay, what exactly am I going to be expecting in the market? Okay, so moving to the monthly time frame, you're having this rejectional level. So you have to first of all identify your various rejectional levels. Okay, it's very important in the market. So some people call it psychological levels, other people too call it demand and supply level, other people call it support and resistance levels, so other people call it key levels. So it depends on how you are going to term it. Okay, it depends on how you are going to term it. So these are the various rejectional levels. When it comes to USD card, these are the various rejectional levels. Okay, these are the various rejectional levels. So moving to the weekly time frame, with the weekly time frame, okay, so you have to first of all move to, as you get to the weekly time frame, ask yourself what's the direction of the market. You get it? So currently, if you can see the market has been trending up, it has been making more of highs and lows, highs and lows, highs and lows. So currently the market is what, trending up at this point. Okay, if you apply the trend line, you'll notice that what, it has been a steep line. Okay, like the market has been what, testing on the various levels, rejectional levels, multiple times. So currently the weekly time frame on USD card is what, an uptrend. Okay, so let's try and bring everything together. Okay, so let's say the various confluences. So trying to get to know our sectional bias. Okay, trying to come out with a sectional bias. So I've been saying this thing, that when it comes to the directional bias, you get it, the directional bias can change based on the time frame you're focusing on. So sometimes we can get to the New York session, and what I was planning with the directional bias, it can change. Okay, sometimes you can get to the New York, maybe I'm expecting a buy at the London session, you can get to the New York and things might change. So it depends. Okay, so it depends when it comes to the sectional bias. So these are the various time frames that I mostly use to make my decision on. Okay, so the weekly, the daily, and the H for the higher time frames. So these are the various time frames that I mostly use to make my decision on. So I mostly use these time frames to make my decision. When it comes to the weekly time frame, you have to first of all define what is the direction of the market. What is the direction of the market at this point? Okay, what's the direction of the market at this point? So is the market trending up or is the market trending down? Okay, so you need to first of all identify your various support and resistance too as well. So you just get to know that the market is trending down, the market is trending up at this market condition. The market is an uptrend. So we had highs and lows, highs and lows, highs and lows, high. So currently the market is trending up in this market condition. So after you have identified the various rejectional levels, you bring your support and resistance level too as well. So if price is trending, if price is going to move up over here, you are going to be getting these rejectional levels. So I think, let me change it to a candle chart and see. It looks like we're having a rejectional level too as well. So there was a rejectional level. If you want to see it very clear, there was a turning point over here. You get it? So there was a turning point around this side. If you look left, okay, so there was a turning point. So anytime price will get here, we are going to see reaction. So it can either be a breakout or it can either be a retest. So you can see price is currently currently sitting, or is currently around the level that we identified. You get it? So if this one price is going to fill this one. There was an error in price formation over here. This is where price was supposed, so this is where the weekly candle closed. You get it? So this was a bullish candle, so the next candle should have started from here, okay, and move up like this. This is how it should have been. This is how it should have been formed. You get it? This is how price should have been formed. But see where it's open, so that means there was an error in price formation. Normally this is how price usually forms. It should start from where it's closed, the previous close. So this was the previous close, so it should have started from here. So once price started from here, that means you are having an error at this point. There was an error in price formation over here. Okay, so this error needs to be corrected. This error needs to be corrected. Okay, so what you have to do is what price needs to correct by pulling back to fill this whole gap over here. There was a gap over here. Price needs to get back and fill the gap. So moving to the daily time frame. So now if you bring the various, please, what causes the error? So mostly what causes the error is what, when we have a high impact news during the weekend. Mostly errors happen during the week, most at times. So sometimes during the Asian session too, we can be seeing errors. Errors happens when there's high volatile news, when there's high impact news. Okay, when there's high impact news. So mostly this one happens during the weekend because the market was closed. The moment the market opened, price moves very fast. So where it was supposed to start, it just was started elsewhere. So errors happens in the market when there was high impact news, especially during mostly it happens during the weekends, but sometimes during the weekdays too, during the trading weeks too, we can be seeing some gaps in the market. But most of the times it happens during the weekends. Okay, mostly when there was high impact news, when the market is closed, it's normally comes out. When the market opens, we normally it comes out with a lot of gaps when the market opens. Okay, so currently the weekly trend is what? An uptrend. The weekly trend is an uptrend. The weekly trend is an uptrend. So we have, since you've identified this thing, the reactional levels, we currently get to know the various rejectional levels too as well. So currently the trend is an uptrend. So this is the only thing that I'm doing at the weekly time frame, being able to identify the reactional levels and identifying the trend too as well. So the trend is an uptrend. So at the weekly time frame, looking at the candle that formed at last week candle, you notice that the candle was having a bullish moment. The candle closed with a bullish momentum candle. If you watch the candle very well, you see that the body of the candle is bigger than the wicks too as well. So it forms with a big bullish body, a big green candle. So this one tells you there was buying momentum in the market. You get it? There was buying momentum in the market. Looking at the wicks, the top wick and the upper wicks, they are very small. Okay, so it tells you buyers were in control. There were a lot of buying pressure in the market. So what I'm expecting currently, since price has broken out from this consolidation zone, what I'm expecting is it should break out and make a pullback on this reactional level. Okay, is to break out and make a pullback on, because if you look left, there was no reactional level. Okay, so I'm expecting buy. Okay, so if I'm taking a sell over here, it means it's a counter trend trade. I'm trying to trade against the main direction of the market. So at the weekly time frame, the main direction of the market is an uptrend. So if I'm taking a sell, that means I'm going against the weekly trend. Okay, I'm going against the weekly. So sometimes you might be lucky. This is a high time frame. We can go to the daily time frame and it's just be it just trending up. That's fine. Okay, so if it falls within your trading plan and you are taking a sell, and if the daily time frame is trending up. It's a trending market at the daily time frame, even though it's against the trend at the weekly time frame. That's fine. Okay, so if you move to the daily time frame, moving to the daily time frame, you can see since December 19th December, the daily time frame has been consolidating a lot of time. But yes, so we have been getting opportunities on USD CAD as well, but it has been consolidating a lot of time, and now finally we have broken out from the consolidation zone, and you see the spike. Okay, so consolidation, price made high, broke out, retested, pullback, retested. So a lot of consolidation from December to what? January. 2 months, 1.5 months or so, it has been consolidating a lot on USD CAD, and finally we have gotten the breakout. So what are you expecting? As price has broken out from the consolidation zone, what are you expecting? Price has broken out, you are expecting price to come back again. Okay, so this wick field is sometime this gap might be a what? This gap might be a pullback at what? The daily time frame. Okay, this gap fill might be a pullback at the daily time frame. So let's move to left and see. Yeah, so if you look left at the daily time frame, do you have any reactional level that price might get rejected? So you're having a reactional level over here. There was a reactional level. If price is coming down, it is definitely coming down to sit on this one. If you look left again, so there's a reactional level 2 over here at the daily time frame. So if price is coming down, I'm expecting price to come to sit on this one. So this is the level I would love to take a buy on. Okay, this is the level I would love to take a buy on at the daily time frame. So now you've seen that the weekly time frame is what? An uptrend. The weekly time frame is an uptrend. What's the daily time frame doing? The daily time frame too is an uptrend too as well. So we have gotten 2 time frame, weekly uptrend, daily time frame uptrend. Gotten 2 time frames in the same direction. Okay, so let's move to the H4 time frame and see what's happening over there. So we have identified the various reactional levels, and you notice that this is the zone that we can be trading within. You get it? This is the zone that you would love to trade within. So let's move to the H4 time frame. So with the H4 time frame, so you have to look left and see. Okay, so with the free version of what do you call it? I think it has ended. Okay, so when it comes to the H4 time frame, if you look left, we don't have any directional bias too as well. Sorry, we don't have any key levels too as well. So looking at the H4 time frame too is what? An uptrend. Price was making highs and lows, Okay, price was just making highs and lows. It broke out from the consolidation zone. Price is currently pulling back on this level. Okay, so at this point, the H4 time frame too is also what? An uptrend. H4 time frame is also what? An uptrend. So after making your analysis and with your various time frames, these are the various time frames that we've gathered. The weekly up, daily up, H4 up. So when you see something like this, what will you be going for? Are you going to be going for a buy, or you are going to be going for a sell? Okay, so with this one, for me, people will go for sell, thinking they are going to take advantage of this gap to be filled. But for me, I'll wait for a buy. Okay, I'll wait for a buy. So if I've mastered how to take advantage of gap, you can just see if the sell is going to happen, then you take advantage of this sell. But as to when the gap price is going to what? Like close on, or as to when where price is going to what? Maybe stop moving down and it's going to move up. I'm expecting price to come to this level. But as to is it going to get to this level, because all the time frames are moving up. Okay, so it looks like a counter trend. All the higher time frame trend market is moving down, so it looks like a counter trend. So as to is it going to move down exactly, that's a situation I can't tell. Okay, a decision I can't make now. So for me, I'm going to be looking for a buy. So I have to look for where am I going to take the buy, take advantage of the buy. So let me look left, because I'm seeing it looks like there was going to be an opportunity on USD card. So let me look left. Okay, so H4 there was no data. Okay, so this is the current market price. Where is the current market price? Where is the current market price? Why is it not showing? Why is the current market price not showing? Have I clicked on something? It should show the current market price. I'm very surprised the market is not giving us the current market price. There should be a hidden line. I don't know whether I've clicked on something. Let me check it out over here. There should be some hidden lines that indicates the current market price. Okay, maybe I'll refresh my distance and see. Maybe it will pop up. Okay. So this is USD card. Okay. This USD card. So as I said, my bias is going to be a buy. Okay. My bias is going to be a buy. So my directional bias or my sectional bias, is going to be a sell. A buy. So I'll be going in for a buy on USD card. This is what I'll be looking for. Okay, so this is I was checking over here. I was looking at this price, this level over here because of the gap. Okay. Because of the gap, so I was thinking that's the current market price. So looking left, daily time frame is not giving us, H4 time frame is not giving us any data to the left. So looking at H4, the daily time frame, so this is the current market price currently. Let me look left and see if there's data looking left. Okay, so there's data over here. So let me clone this one. So there's rejectional level over here. So if price is moving up, this is the level price is going to get rejected. So I think we have some. Okay, the zone is very small, so maybe I'll wait to take advantage of this zone rather, but the gap is going to get filled. So we have like 168 pips over here, so maybe I'll take advantage of the buy, but I'm expecting this gap to get filled. If this gap gets filled, so I've not mastered on how to take advantage of the gap. Okay, so I'm not going to be, it doesn't force within my trading plan, so I'm not going to take advantage. This is against my trading plan. This is not my plan for the month to be taking trace of, which is against this, something like this, what I've done, the analysis that I've done. Okay, so I've not mastered how to take advantage of gap. So if you have mastered how to take advantage of gap, that's fine. So for me, based on my little experience I have on how mostly when you see gaps in the markets, I know that it's going to get filled, but as to when it's going to get filled, I don't know. If my analysis aligns with the gap, that's when I take advantage of. But if it doesn't align and I've seen that this is just a counter trend trade, I'm not going to be taking it because it doesn't force within my trading plan. Okay, so for now I'll wait for price to, if price decides to fill the whole of this gap, then maybe I'll be waiting to take trade over here. This is the level that I would love to what shoot a buy. Okay, that's when price has decided to fill the whole gap and close below this side. This is where I would love to take a buy. But if price decides to what break over here, this is the point I would love to what I'll wait for price to break, make a pullback, then what I'll take a buy. Okay, so I have to wait. So now everything is what to wait. I have to wait and see what price is going to do. So it's either going to pull back over here, fill this gap, pull back over here, rest on here, then what I'll look for a buy entry and take a buy. Or if price decides to just move up, I'll just wait for price to break out. After it has broken out from the zone, then I'll wait for what price to pull back to give me a discounted price, then what I'll take a buy. That's what I'll be looking for. So for now, I don't have any there was a bias on it. Okay, there was a bias on it, but I don't have there was no setup, there was no entry, just waiting for price to just pull back. If it pulls back over here, and what I'll take a buy. So just if you want to master how to take advantage of gaps, you have to study it for long to see the ins and outs about how mostly when gaps forms, how it normally plays out. So you need to master one thing, master something in the market. Okay, it's all about patterns. Study the footprint of the market, study the footprint of price, how it normally moves. Okay, how it normally moves. So let's check out on gold and see. So when it comes to gold, first of all, let's identify the various rejectional levels and see what's happening. Let's identify the various rejectional levels. So when it comes to gold, these are the various rejectional levels. So moving to the weekly time frame. So the weekly time frame is trending up. You get it? The market is trending up. This is how it looks like. So you have to understand how to read the directional bias. So it is currently trending up. So we have highs, pullback, high, currently made a downtrend. Okay, so when it made higher high, came and broke the previous immediate higher low, the trend shifted to what? A downtrend. So it made high again, just pulled back, made high. So now the trend has what? Broken out. So it's currently what? An uptrend. It's currently an uptrend at what? It's currently an uptrend at the weekly time frame. It's currently an uptrend at the weekly time frame. Okay, so what I'm expecting at the weekly time frame is price has currently broken out from the consolidation zone. If you look left, there was a consolidation zone over here, or there was a key level over here. There was a key level. So price has finally broken out from the key levels. Okay, price has finally broken out from the key level. So what I'm expecting is what? Price to give us a discounted price to pull back, then we take advantage of at the weekly time frame. But what you have to understand is what? This is the weekly time frame. So the weekly trend is what? An uptrend. Okay, the weekly trend is currently an uptrend. If you pull up your trend line, you notice that price has been trending up since. Okay, price has been trending up since. So currently the trend at the weekly time frame is what? An uptrend. Moving to the daily time frame. So moving to the daily time frame. With the daily time frame, this is the various rejectional level. This is the various rejectional level at the daily time frame. So you notice that the daily time frame too is also an uptrend at this point. Okay, the daily time frame is an uptrend. Price just made high, pull back, price made high, pull back, price made high, pull back. So price has been trending up ever since. Price has been trending up ever since. So currently the daily time frame is what? An uptrend. The daily time frame is an uptrend at this point. the daily time frame is an uptrend. So if you change it to a line chart, we're expecting price to pull back, come down and pull back on this level. Expecting price to pull back on this level. You get it? All right, so the daily time frame to weekly is an uptrend at this point. The trend is what? The market is trending up at this point. The daily time frame is also trending up at this point. Okay, so price is currently making a turning point over here. So if you move to the H4 time frame, what's the H4 time frame telling us? At the H4 time frame, price is currently a downtrend. So since H4 time frame is a downtrend, let's look at the previous daily candle. So this is how the previous daily candle closed, but this one never formed on what? A key level. So it was just in the middle of the zone. So the current H4 candle is what? The candle structure is what? A downtrend, because it has broken the previous candle low. Okay, it has broken the previous candle low. So the previous daily candle is what? A downtrend at this point. So looking at the H4 time frame, the H4 time frame trend is what? The candle trend too is also what? A downtrend. So if you look at the H4 structure is what? A downtrend. Okay, so weekly is an uptrend, daily is what? An uptrend, but H4 is currently what? A downtrend. So price just broke out. Okay, price broke out, made a pullback, price broke out, made a pullback. So the H4 time frame is what? A downtrend. So does it mean that it is going to fill the gap back before going in our direction? Yeah, so mostly based on experience, mostly when price makes a gap, when price creates a gap, it mostly gets filled. Okay, price will just pull back. So that get filled is what? Maybe if you see a gap like this, this is how the market was supposed to. Maybe it was supposed to move like this. Sorry, it was supposed to move like this. Okay, so the moment it gives this gap, we have to correct this error over here. So price is going to pull back and fill this error. Okay, price is going to pull back. So if it pulls back and fill the hole over here, that means this one has been corrected. The error has been corrected. So that's what you call a gap fill. The gap has been filled. Okay, it has been closed by the what? Ongoing swing. You get it? It has been filled by the ongoing swing. So that's how it mostly works. So I'm expecting at this point, this candle. So it looks like the H4 candle opens with no wick, but it looks like there was a wick, there was a small wick. It's visible. So now the H4 time frame is what? A downtrend. So what I'm expecting it to happen is what? Maybe I'm expecting price to get rejected over here, come down. Okay, H4 time frame to come down, but looking at the range at the H4 time frame, it's very small. The range is very small to take a sell. The range is very small to take a sell. So if you move to H1 time frame, yeah, it's very small to take a sell. Okay, so when it comes to buy, since H4 is what? A downtrend, I have to wait for a shifting trend. Okay, I have to see something like this. Maybe if price H4 makes something like this, breaks, then I will be looking for a buy. Then it will align with the weekly time frame and the daily time frame. Okay, that's when I will be looking for a buy at this point. But currently, the way price is forming, they're looking for a sell. The zone is very small. Okay, the zone is very small, so I will not love to take a sell on gold at this moment. If you move to the lower time frames, the zone is very small. The zone is very small to take advantage of. So you need to look for a good risk to reward trade. So the zone is very small for me. So I will wait for what? A shift in structure, or maybe if the candle breaks above this one, then I will be considering a sell on gold. If the candle breaks, if you get a candle break below, sorry, if you get a candle close below this one, then I'll consider taking what, a sell. Okay, then I'll consider taking a sell on this trade. That's what I would love to see. Then maybe the risk reward is going to be like, so it's like 112 pips. So this way I would love to take a sell on. I will be looking for a sell on this trade. Other than that, then I don't think it's worth taking a sell on this small zone. I don't think it's worth taking a sell on this. So that's gold. That's what I'll be looking for on gold. Okay, so when it comes to GBP USD, when it comes to GBP USD on this market, when it comes to GBP USD, so we're having this rejectional level over here. We're having this rejectional level. We're having this rejectional level too as well. Okay, so the monthly time frame, these are the various. So the rejectional level simply means what? The various support and resistance levels. Okay, so anytime price will get to those levels, we mostly get action. So price is either going to break out from those levels, price is either going to pull back on those levels. Okay, we are going to be getting pullback. So you need to, first of all, there are sensitive levels that anytime price gets there, we see action over there. So the reaction we mostly see over there is either breakout reactions or what, a pullback reaction. So you need to make sure you have identified them or indicate them on the chart correctly. You get it? You've indicated them on the chart correctly. So these are the various levels that you're expecting price to what, get reacted on. So moving to the weekly time frame. So you see the weekly time frame. Wow. So you see this setup, this pattern. If you guys have been taking notes or you've been observant, this pattern last 2 weeks or so, the same pattern happens on the daily time frame. So kindly have a look at this pattern. Okay, you see price just broke out, made a pullback, and what, it happened. But at this time it's happening on what, the weekly time frame. So looking at the daily time frame, the pattern that I was talking about, the one that we took the other time that gave us plenty pips. So this is the pattern. So you can see it over here. Price just broke out, made a pullback. See, it's the same pattern that is happening on the weekly time frame. The same pattern. Price just broke out, made a pullback, just what, created a resistance and just continued. So it's the same pattern that happened on what, the daily time frame too as well. So that's why I always advise, trading is all about being able to recognize the patterns. If you can recognize the pattern and take one particular pattern that has been giving you more wins in the market, then I think you are on your way to success in the forex market, or you are on your way to be making a lot of money in the forex market. If you see one particular thing and it happens in the market like twice in a month, and you know that it is a high chances of it playing out, then you are going to be making a lot of money in the market. So it's all about being able to recognize a pattern. So this is what I'm expecting. So currently the pattern has already spot. So we are waiting for, since there was an error over here, okay, there was an error over here. So since there was an error, we move to the daily time frame. If you move to the daily time frame, the weekly time frame is what has made a perfect break, made a retested, created this resistance, and I'm expecting price to come down. Okay, so the weekly time frame is what, a downtrend. So there was a rejectional level over here at the weekly time frame. So this is a monthly time frame, but since it's not close to that level, let me push it up to this end. So moving to the daily time frame, what's the daily time frame trend? So the daily time frame is currently what, the market is currently trending up. Okay, the market is currently trending up. So price just made a lower low, lower high, lower low. So this point the market is what? And it's a downtrend. Okay, so the moment it broke out from this one, it shifted trend to what? An uptrend, made a pullback, and what? The trend continues. So currently the trend is what? An uptrend at the daily time frame. The trend is an uptrend at the daily time frame. So you're having this rejectional level over here. You get the trend is currently an uptrend. So this is where the current market price is. So you're having this rejectional level or two at this point. So the daily and H4, the daily is currently an uptrend, but weekly is what? A downtrend. Okay, weekly is currently an uptrend. So you can see that this weekly rejectional level that you got from the weekly time frame is aligned the same on what the daily time frame too as well. So this level is going to be very strong for price to break. So let's look at the H4 time frame too. So the H4 time frame too is a downtrend, but daily is what? An uptrend. Okay, and you're having this area over here for price to get filled. So I strongly believe that this week, okay, let's live to see. So there was inconsistency in the market. Okay, so this market condition is not favorable. I have to wait for price to give us a correct market structure, give us a correct direction, correct pattern, then we take advantage of, because I'm not seeing nice patterns over here. The daily is what? Daily is what? An uptrend. H4 is currently a downtrend. Okay, so looking at the H4 candle, you notice that the H4 candle looks like it opens with no wick. Okay, so it kind of uncertainty. So me, I'm having only few chances to execute for the month. So I have to make sure, because I'm going to risk the risk I'm pushing for the trades that I'm going to be taking is very big. So I have to look for a high probability trade setups. And I know within the months on these three pairs that I'm trading, USD, GBP, USD, USD CAD, USDC, no matter what, I'm going to get two high quality setup for the month. So I'm very calm waiting for that time. But when it comes to the time it is going to happen, I can't tell. I don't know whether it's going to happen tomorrow. I don't know whether it's going to be happening during the New York session. I don't exactly know. Okay, I don't know exactly when that time is going to happen. So what I have to do is just to stay calm and observe. You get it? Just to stay calm and show up every day. You don't know when exactly that time is going to be happening in the market. That time the market is going to give you an opportunity. That's what most people don't understand about the market. They think like every day when they come to the market, you don't know when opportunity is going to come into the market. So the reason why you have been taking random trades, you've been taking trades here and there, is because you don't have a system. If you have a plan, a lot of people have been getting these messages, a lot of people messaging me, oh, I can't follow, like I've been revenge trading, I've been trading a lot. If you have plan and the thing hasn't aligned, what makes you take this trade? What is going to make you take a trade? Okay, but because you don't have a plan, I always stress on this thing. Have a plan. Your plan should include the things you look for before you execute a trade. So it is life in general. If you don't have a plan, what you want to do in life, you are just going to be running in, like you are just going to be walking on earth, back and forth, doing back and forth, moving back and forth with no vision, no plan. You are just going to be moved anyhow. Okay, you are just going to be moved anyhow by anyone, because you don't have a plan. Anyone can just come and pick you up. Oh, let's go and do this. Because you don't have a plan, you just follow the person. If you have something working on, you are seriously working on something day in and day out, you are seriously working on a project you want to accomplish, you want to work on something that you want to achieve, you are not going to pay attention to what the person. You tell the person, I'm busy, I'm doing something, I'm working on a project, please, I won't be able to get time. You get it? But it's the same thing in trading. If you have a plan, okay, if you have a plan that you follow, there's no way someone is going to just give you a signal and you just trade this blindly without understanding the thought process of the person. You get it? So Planning your trade is very, very important. I want everyone to be a better trader. It is not about the number of trades that you take, it's about the quality of the trades that you are taking. As I'm telling you, last month, if I paid attention to my risk management, okay, risking 2% per trade on all the trades that I took, I would have easily made like 8%, 7% for the month. Only 2 trades for the month, I would have easily made 8%, 7% for the month. So it's all about understanding, okay, understanding your patterns, understanding what you have seen it happening in the market more often, and taking advantage of it. You get it? Trading is very simple. Trading is not something it should be. Just have time and monitor something that repeats itself day in and day out. It repeats itself more often, and take advantage of it. And it's not about how you hit the market, you go hard on the market every day, how you go, let the market come to you, let the market just come to you. And one thing from my observation in the market, since the number of years I've traded in the market, if you are going to be calm, if you are going to be steady, calm and steady, sit on your charts waiting for the right time, every single thing that you mostly wait for it to happen in the market is going to play, it's going to just set up perfectly for you to execute the day that you never expected. It is going to, the pattern is just going to align, everything is going to align, and it is going to be an easy trade within a month. Every month that thing is going to happen. You get it? So just stay calm, just stay patient, and things are going to be playing out in your favor. So let's move on to, so with GBP USD, deciding on the directional bias is going to be very tough. Okay, so currently moving to USD CHF, moving to USD. So you see, as I said, you don't know when the gap is going to get filled. Okay, you don't know when the gap is going to get filled. So if price is just moving and you just execute a sell thinking the gap is going to get filled, you need to make sure you understand your entry, what you normally look for when it comes to entry. Does it align? You don't have to just blindly take a gap fill, just telling yourself the gap is going to get filled and you just execute based on that. It doesn't work that way. Okay, so you need to make sure you understand. You need to make sure you understand. Okay, so if your entry criteria aligns, then there's an additional confluence of a gap, then you take a sell. If your confluence doesn't align with, if your entry criteria doesn't align with this gap, then I think it's not for you. So for me, what I normally look for is not aligned with this gap field, so I'm just going to let it go. Okay, I'm just going to let it go. So let's look at USD CHF and what we are going to be expecting. So on USD CHF, so this will be the last analysis you are going to be making on. So we're having this rejectional level over here. Price is currently approaching a key level. Okay, price is currently approaching a key monthly level. So the chances that it is going to get rejected and pull back is very high. So if you look at the monthly candle carefully, you will notice that there was a gap on the monthly time frame. There was an error on price formation over here. There was an error on price formation. This is where it was supposed to start forming, but I see where it formed. So it tells you there was an error in price formation. So there was an error in price formation. You get it? There was an error in price formation. So this way it starts. So this is a bullish candle, and this point is supposed to be the opening of the candle, and this point is supposed to be the close of the candle too as well. Okay, so if the next candle is forming, it's supposed to start at where it's closed. So this is where it was supposed to start. Okay, this is where it's supposed to start, but see where it started. So it tells you there was an error in price formation. There was an error in price formation. There was an error in price formation over here. So looking at the weekly time frame, with the weekly time frame, this is the rejectional level over here. So with the weekly time frame, is currently price has broken out from the weekly zone, so it's currently approaching the monthly zone. So we're having this rejectional level over here. So the weekly trend is clearly what's an uptrend. Okay, it's clearly what's an uptrend at this point. So looking at the daily time frame, so there's a gap over here. This gap is going to get filled, but as to when it is going to get filled for now, we can't tell. Okay, for as to when it's going to get filled, we can't tell for now. So there's this rejectional level. So the daily time frame too is currently what's an uptrend. Okay, the daily time frame is currently an uptrend. Looking at the H4 time frame, so the H4 time frame too is also an uptrend. So all the time frames are uptrend, but it's approaching this monthly rejectional level over here. So it's going to be very tough for price to break at this point. It's going to be very, very tough for price to break this monthly zone. It's going to be very tough for price to break the monthly zone. So what I'm expecting is, because you're having a gap over here, you have to wait. So sometimes price can just form a market structure. So this gap, the chances of this gap getting filled, it can't fill today. Sometimes it can take weeks for it to get filled. Okay, so we're having a lot of gaps. We have seen in the past, we have seen some gaps. I remember, you see this gap, you see the time it took before it got filled. I remember you were expecting to take a buy or so, waiting for the gap to get filled, but around 25th November, and see the time it got filled. December before it got filled. You get it? So you have to make sure the gap you want to take advantage of aligns with what your trading setup or your trading style. Does it align with mostly what you normally look for in a trade before you take advantage of? You get it? Does it align? So if it doesn't align, okay, if it doesn't align, then I think it's not for you. Okay, so this one, for instance, you can see it can take a month before it will fill. This can take months. So as it is giving you a gap over here, doesn't mean it's going to fill. I've given you an example where we had a gap and it took like weeks before it got filled. Okay, it took weeks before the gap got filled. So this one, the gap happened around 24th November, and see the time it filled. So it filled on what? It took 1 month for it to get filled. It took 1 month for it to get filled. So sometimes if you are lucky, the gap is going to fill that day or maybe the following day, but sometimes too it's going to take a very long time for it to get filled. So we're having instances where, so this one, there was a gap over here. I think this one formed the following day. So this one was third and it formed. Okay, so I think it took two days for it to get filled. Okay, so gap has been happening. So this one too, there was a gap over here, and I think this one formed the same time, the following day it got filled this following day. Yeah, so it depends. You don't know exactly when. You don't know when it's going to get filled. That's the issue, or that's the problem now. You don't know when it's going to get filled. So you need to make sure you are playing your cards well. Make sure you are executing something that is in according to your trading plan, or that falls within your trading system. Okay. Yeah. Before you execute a trade. Okay. So if you have any question, kindly drop it in the chat box. So with the live session that we have been doing, so you guys have seen in the past, I've been consistent every day on this live session. I've been consistent every day on the live stream, but unfortunately that energy has dimmed. I'm not going to be coming on live every day as I used to be. So maybe within a week I will either come live either 2 or once a week. Okay, I'll either come live either once. I'm not going to be doing it every day because it's kind of draining. Okay, it's kind of draining, so I will not be coming live every single day as I used to be. And with my trading style too, you see, you don't get trades every day. Okay, I'm not a scalper. I don't focus on the lower time frames that every day. And people normally join the live stream because they want to get a trade and other stuff. But since I'm not a scalper, mostly it brings a lot of pressure on me. Asking you have to get them trade, you have to get them trade. So the live stream is not going to be doing. I'm not going to be showing up every day like as I used to be. Within a week, I'm just deciding on either it's going to be twice a week or once a week. Okay. So now I'm contemplating on either it's going to be twice a week because my trading style doesn't fit live stream every day. Okay. So maybe within a week I'll show up either once within a week. Okay. It's not going to be everyday thing. Okay, it's not going to be everyday thing. So if you want to get to know more, you can go through the past streams to watch more of the streaming to get your hands on. So that's the information I have for you. In case maybe you don't see me more often on the stream, on the yeah, if you don't see me more often, so that's it. I'm not going to be coming every single day as I used to be. It's either going to be once or twice in a week. I've done a lot for you people, so it's not going to be every day because my trading style doesn't fit every day. So if someone it's different if someone focus solely on maybe the 5 minutes, the 15 minutes, that person can be getting trade for you every day. But with my trading style, I'm kind of patient, I'm kind of focusing on the high time frame. So doing live stream every day doesn't make sense. I always come up showing, analyzing. I have to execute in real times for you to be able to see. So I've decided to make it once a week. It's not going either once or twice. It depends, but I'm thinking about it. So it's either going to be once a week. That's what I've decided to be doing or plan of doing. It's not going to be every day. So guys, that's it. Yeah, so Mondays I'll come and it's mostly Mondays. It's going to be Mondays. Okay, Mondays I will come and warm you up, and sometimes to Sundays we can do post analysis and give advice. Okay, it's either going to be Monday. It depends. Either Monday, yeah, either Monday. So it depends with the day. So you have to put the channel on all notification. If I come live, you get to know. Okay, so I've not decided on the specific date yet. But if anything, I will notify you. Anytime I want to come live, I will notify you. But it's not going to be every single day. So tomorrow you are not going to be seeing me here. I'm not going to come live again every single day. That's kind of training. And with my trading style doesn't fit trading doing live session every day. It doesn't fit. Okay. So if anyone is having a question, please let me know. But I'll make sure when I come live too, I'm going to give you value that it's even going to cover the whole of what we missed for the past days too as well. Any question? Any question? So the information I have for you is what prioritize risk management. Okay, keep track, journal your trades, keep track of your your journey. Keep track of your journey. Okay, if you are not keeping track of your journey, it's going to be very tough for you to see consistency. So keep track of your journey. It's very, very important. Okay, keep track of your journey. It's very, very important. So sometimes too, I can come live, but anytime I will come live, I will let you people know. Anytime I come live, I will let people know. I can come live unannounced. I can come live unannounced. So if I want to come live, I will let you people know. Any question? Any question? If you have a question, kindly drop it in the chat box. So for now, there was no trade for now. There's no trade for me for now. The market is kind of chubby. It's kind of just ranging. Yeah, so I will let you people know if I'll come live, but it's not going to be. It's not going to be like every day. Every day is kind of, and I think I have to get time to analyze to make. At what point do you add positions when you're already in a trade? And so when it comes to adding position in a trade, you are either going to trail your stop. Adding position in a trade sometimes becomes very risky because you don't know when price is going to reverse. Okay, so it depends. So let's say maybe this is your target. Okay, this is the chart. Price is, this is your target. So at points, the points where, okay, let me take a real life example. So let's say this, maybe you entered a position over here. You entered when price was moving. You entered a position over here. This was the price you entered. Okay, so you are going to add positions when price, maybe if you move to the lower time frame, like the 30 minutes, maybe this is the H4 time frame. Okay, this is the H4 time frame, and this is your target. This is the H4 time frame, and your target is at this point. You have to know your take profit. It's very important when you are trying to add position. This is your take profit. This is your target. Take profit or target. This is your take profit. You get it. This is your take profit. So if you enter a position over here, you know that this is your target. Okay, price hasn't gotten there, so price doesn't move in a straight line. Okay, price doesn't move in a straight line like this. The market doesn't move a straight line like this. No matter if this is the target, you are going to be having something like this, okay, before it will get here. Okay, if you don't see that pullbacks, if you go to the lower time frame, by all means you are going to see some pullbacks, unless maybe there was some high impact news, or that's when the market is going to move straight, okay, to the target. But most of the times, if there was no high impact news, if there was no, like, maybe there was no high impact news, the market is going to move straight. Getting the market moving straight to your direction is sometimes very difficult. The market doesn't move straight like that. Okay, so it moves, maybe it's pull back, it will move in your direction, it will pull back. Okay, so let's say you enter the market over here and price is moving. So if you want to add position, you move to the lower time frame, like the 30-minute time frame. Okay, so if it pulls back and it is about to flip, this is where you start adding position. So this is where you enter your second position and you place your stop loss below. Okay, so this will be your second position. So this will be your second position. So you are adding position to your trade. Okay, so if price is moving and price pulls back and breaks the structure, you add your you add your third position. You add your third position. You add your third position. You get it? You add your third position. So if price moves and pulls back and breaks this one, you add your fourth position, so price gets what? Your target. So this one will be your fourth position, right? So you add your fourth position over here. You get it? But one disadvantage of adding positions to trade is what? It's kind of, one disadvantage is what? This one, you are relying solely on what? You are relying solely on the lower time frames, because when it comes to the lower time frames, the zones are not as strong as compared to the higher time frame zones. You get it? The zones are not stronger as compared to the higher time frame zone. So even though price has broken the structure, as price has broken the structure like this, if it is lower time frame, price can just make a U-turn and what? Come and hit your stop loss. So if you are adding a position, it's kind of it's a way of maximizing your wins. Okay, so after adding those positions, well, so your stop loss will be structure below structure level. So your stop loss will be here. So this position, with this position, this is where your stop loss is going to be. Structure level, below structure level. So this will be your stop loss. This is where your SL is going to be. So this one too, this is where your SL is going to be. This is where your SL is going to be. So the same thing as this one too. This is where your SL is going to be. So these are where you are going to be placing your SL. You get it? These are where you're going to place your stop loss. So as I'm saying, when it comes to adding position, since it is the lower time frame, okay, since it is the lower time frame, the levels are not as strong as compared to taking a trade on the high time frame that you normally place your stop loss on what? The weekly, the monthly, or H4 levels. When it comes to the lower time frames, the levels that you have hidden on, or the levels that these levels can easily be broken by price. You get it? Because it is lower time frame and price can just come down and break it and move in your favor. Okay, price can just come down, easily break it and just move it up. One thing you need to understand too is what? When it comes to the lower time frame, price easily what? Price easily shifts, or price easily change structure most often in the market. When it comes to the lower time frame, price easily change structure in the lower time frames most often, especially when it comes to the 15-minute time frame. When it comes to the 5-minute time frame, it is very easy for price to what? Change every single time, every single minute. Price is just changing structure at the lower time frame, so it makes it very what? Risky. Okay, it makes it very risky when it comes to what? The higher time frames. It makes it very risky when it comes to what? The higher time frame. So that's what you need to understand. That's what you need to understand about what? The adding positions. Okay, so with the adding positions, it's a way of maximizing your profit. On one move, you can maximize your profit, but you don't have to add position when you are in loss with your previous position. Okay, you have to make sure your previous position is in profit. So when you are adding position over here, make sure you have break even. Okay, so now you have added a new risk. the old risk has expired because you have already break even. So now if price comes over here, this is where you are going to place your stop loss. So that means this position is a risk-free position. Okay, this position is going to be what? Risk-free. So this is where you are going to what? Place your stop loss. You get it? You are going to place your stop loss over here. So now this one has what? Elapsed. This is where you are going to place your stop loss. Okay, you are going to place your stop loss over here. So when you move over here, you are going to place your stop loss to over here. You get it? So that's how we what? If price moves, you what? You break even. If price moves, you break even. Okay, so to protect your previous positions, protect your capital on the previous positions. So that's how it usually works. So as I'm saying, the lower time frames, relying on the lower time frames to add positions. Mostly we add positions when we move to the lower time frame because you already know the overall target. The overall target for price to get to this level. Okay, overall target for price to get to this level. You get it. The overall target for price to get to this level. So you need to understand. Yeah, so that's it. Any question? Yeah, so adding positions to a trade becomes sometimes it becomes very risky based on the time frame, especially with the lower time frames. It's easily for price to just get invalidated most often. It's easily for it to get invalidated most often. So you need to understand, but it's a way you can maximize your profits. It's a way you can maximize profit on higher time frames. Like it's a way to maximize profit on a move. Okay, with one move you can capitalize on it. Instead of you to get like maybe 1 to 3, you can just maximize your profit and you can be getting more than what you expected. But mostly from experience, price can easily come back and what take you out and take you. So it's kind of risky based on where you are going to be placing your stop loss. It's kind of risky. So you need to understand. Okay, you need to understand the ins and outs about adding positions to that. So that's how it mostly works. But it's a way you can maximize your profit. It's a best way. Instead of you getting 5% on the trade, you can maximize your profit and you'll be getting 8% on one particular position. You get it? You can get like on particular position. You can be getting a lot on one particular position. So that's how it mostly works. That's how it mostly works. Yeah. Yeah, so the market is not ready yet. You have just started the month. You need to keep it slow, keep it steady. Still observing, executing what you have seen it in the market before. That's all that you are going to be going for this month. So this month, you have to get a target for the month. Your target should be measured on weekly or daily. Your target should be measured on monthly basis. That's the best way to not to put pressure on you. What target have you set for the month to make? So last month I made like, it wasn't encouraging, but I think since you are at the end of the month you became profitable. I made like 1.3 or 1.4% last month. I made like 1.4% last month. It wasn't something I was looking up to, desiring for. But since I've made profits, it's a good way, it's a good start. Okay. We just started the year. So this month like this, I'm aiming like either 6-7% for the month. That's what I'm aiming based on, I did my calculation, I did my math. That's what I'm aiming for. So let's see how it's going to go. So which time frame is the best to trade with? So we don't trade on one particular time frame. You do top down analysis. Okay, we analyze from the higher time frame. So for me, I do top down analysis analyzing from the high time frame, the monthly time frame, the weekly time frame, the daily time frame, the H4 time frame, and I will make my decision. Okay, so we don't focus solely on one time frame to make decision. I focus on multiple time frames to make. So we don't have something called what is the best time frame. You need to know what is going on in other time frames too. Okay, know what is going on in the other time frame, what is happening. Maybe if you focus solely on the H4, you might not know there was a key level at the weekly time frame. You might not know there was a key level at the daily time frame. So you need to pay attention to all those time frames. You get it? You need to pay attention to all those time frames to make your decision. You need to pay attention to the other time frame, what is going on in the other time frame, so that you will not be lost in the source. It's not advisable to be taking a buy on a support, taking a sell on a resistance. That's not the best way to go. So you have to always make sure you are taking your position on a stronger, you are not buying or selling on what stronger levels. So you don't focus solely on one time frame. You have to do top-down analysis. Okay, do top-down analysis. Know what is going on in the other time frames. Know what is going on in the other time frame. Don't focus or rely solely on one time frames for your decision making. Focus on multiple time frames for your decision making. Know what is going on in the other time frames so that you make your decision. Okay, you make your decision. That's the best way to go. Yeah, so like for instance, imagine this is what the weekly time frame, the monthly time frame. So if you are focusing solely on the 30 minutes, you wouldn't have known there was a rejectional level over here, and you can see price is just getting rejected on the level. You get it? So imagine if you focus solely on the 30 minutes, you wouldn't have known that there was a rejectional level over here. You get it? So it's always important you get to understand what is going on in the other time frames, like the higher time frame. Know exactly what is happening on other time frames, the higher time frame, so that you'll be able to make your decision on what the lower time frame. That's the best way to go by when it comes to trading. Do top down analysis. So you don't trade on one time frames according to my, because one thing you need to understand, when it comes to trading, if you are inputting a trade, you need to ask yourself, is it the best what do you call it, is it the best investment you are making? Because every trade that you are inputting, it is money that you are going to use it to best. So ask yourself, is it the best investment you are going to invest in? Is it the best investment you are investing in? You get it? You need to ask yourself, is it the best investment you are doing? If it is bad investment, then your money is going to go waste. Okay, if it is bad investment, that means your money is going to go waste. So you need to always ask yourself, is it best investment you are going to be doing? Okay, is it best investment you are going to be doing? If it is not best, then your money is going to go away. So you have to, so that's why it's always important you make the right decision. Okay, you make the right decision. It's very, very important. Okay, so if there's no question again, see you next time. All right. So, any question again? So it looks like the gap wants to fail. it looks like this gap wants to fill. So it's like 100 pips. 100 pips, more than 100 pips. 100 pips gap. It's like 100 pips on the gap. So let's see, is it going to get filled? Okay, so guys, that's it. If you have any question, you can DM me, you can message me on WhatsApp as well. Okay, you can message me on WhatsApp if you want to learn how to trade. You can message me, you can WhatsApp or call, or you can call. You can message or call this number. You can message or call me on. So it looks like the gap is filling. So let me check USDCHF2 whether it's also filling. Yeah, it's also pulling back. It looks like, so this one too is also filling. It looks like the gap wants to fill. So this week we have a lot of fundamentals. So you have an employment change. Okay, that was okay. So we are in NFP week. Okay, so Charlie, you need to be very, very careful when it comes to NFP week. We are in NFP week, and you need to be very careful. NFP weeks mostly are not profitable weeks. NFP weeks are mostly based on experience and not profitable weeks. And you're having interest rates on the pound too as well. So you need to make sure you are going in for what a high probability trade setup. You are in NFP week. NFP weeks are mostly kind of what not profitable weeks based from experience. They are mostly not profitable weeks. So you need to make sure you are going in for what quality trades. You are going in for quality trades. Okay, guys, see you next time. Bye.